Alright, welcome to part 2, which is posting. In part 1 of the video for chapter 2, we learned about journalizing transactions, and the results of our journalizing transactions are over here on the left-hand side of the screen. So over here we have a listing of everything that has happened in chronological order and the accounts that it has affected, whether they have increased or decreased. But we're actually lacking a lot of important information. So for example, how much cash do we have right now? How much money does the business owe? And how much net income does the business have? So in order to answer those questions, we have to post to the T accounts. So what we do is we open up a T for each account mentioned in the general journal. So if we see an account mentioned in that general journal, we open up a T. And notice the T's aren't just open up any old place, they're sorted. So first we list all of our asset T's, then our liability T's, then come our equity T's, then our revenue T's, and then our expenses T's. We're going to go off for just a moment and explain what happens with the T account, and then we'll come back and post the H transactions of Net Solutions to their T accounts. So right over here, this big T in the middle of the screen represents any account. It doesn't matter whether the account is an asset, liability, equity, revenue, or expense. The rules of debit and credit are the same. Debits always get posted to the left side of the T. So basically, if it's on the left side of the journal entry, it goes to the left side of the T. Again, it doesn't matter whether it's an asset, liability, equity, revenue, or expense. But if the general journal says to debit an account, that amount goes on the left side of the account's T. Now, on the other side, all credits get posted to the right side of our T. So once again, it does not matter what type of account it is: asset, liability, equity, revenue, or expense. Basically, if it's on the right side of the journal entry, that means we're supposed to credit the account, and if we're supposed to credit the account, that amount goes on the right side of the T. Now, all we have to do is learn about the rules of adding up the accounts. So the whole goal of this is to get the ending balance in each account. How much cash do we have? How much land do we have? How much accounts payable do we owe? So we have to be able to figure out the ending balance in the accounts. It also helps to know the normal balance in the account, but it's not necessary. So if we see two entries on one side, so for example, let's say we purchased 20,000 of land, and then we purchase another 5,000 of land. Well, what's going to happen is, together, we're going to have 25,000 of land. So notice they're both on the debit side. So both being on the debit side, they're going to add together, and a debit plus a debit is going to result in a debit balance. So it's not enough to say, oh, we have a $25,000 balance in land. You have to say, no, we have a $25,000 debit balance in the land account. Normally we put a circle around that so we don't confuse that with the posting. So this basically shows, because land is an asset, the left-hand side represents an increase. So that shows that we increased the land 20,000 and 5,000 two separate times for a total of $25,000 in increases. Now, on the opposite side, a credit plus a credit results in a credit balance. So let's say Chris Clark first invested $25,000 in his business and then needed to invest another $10,000 more. Well, in a capital account, in an equity account, a credit means an increase. So we would have a $25,000 plus a $10,000, and notice they're both on the right-hand side, they're both on the credit side. So because they're on the credit, we would add them together, and that would result in $35,000, and again, not just a $35,000 ending balance, that's not enough. $35,000 on the credit side, because the whole point of this is to balance out total debits and total credits at the end. Now, debits and credits add and subtract from each other, and the ending balance winds up on the side that's higher, and it helps to know the normal balance. So for example, cash is an asset, and the normal balance is a debit. So let's say the business had a cash receipt of $10,000 and a cash payment of $3,000. It would be represented like this in the T. The $10,000 would be on the debit side, that would represent a cash increase, and the $3,000 would be on the credit side, that would represent a cash decrease. So to add the ending balance in the cash account, we'd have to add the increases and subtract the decreases. And notice we don't use positive and negative numbers in the T accounts, just the side that it's on tells you whether to add or subtract it. So in fact, using negative numbers in the T accounts would be extremely confusing. We also normally don't use dollar signs in the T accounts because we already know it's about money. Everything about accounting is about money. So if cash is increased by $10,000 and decreased by $3,000, the ending balance would be $7,000, but once again, very important, $7,000 on the debit side. And finally, let's say accounts payable. We're going to actually see this in Net Solutions. Let's say you charged up $2,000 and then paid off $500 of the bill. Well, in English, you know that $2,000 charged minus $500 paid on your bill gives you a $1,500 balance. So in this case, in the accounts payable, we would take the $2,000 credit, and again, it helps to know that with accounts payable, it's a liability, so the credit side means that we have more. Credit side means an increase. So we're going to increase the account by $2,000 and decrease it by $500, ending balance $1,500, and again, extremely important, it's not enough to say the ending balance is $1,500, it's $1,500 on the credit side. So now that we have an understanding about how to post, let's go back to the H transactions of Net Solutions and let's post them to the Net Solutions T accounts. So right over here, let's start with transaction A. We always want to do them in order, in the order that they happened. That can actually be pretty important later on. So the first thing that we're going to do is we're going to post transaction A. So the first line in transaction A is giving us an instruction. It is telling us to go to the cash account and post $25,000 on the debit side. Notice it says cash, $25,000 debit in the first line. So what we want to do is we want to go to the cash account and post $25,000 on the debit side, which is always on the left side. So once again, we know basically that if it's on the left side of the entry, it goes to the left side of the T. It also helps to note that that comes from transaction A. It will help us later if we don't balance. Now if we only post the first part of this and not the second part of this, we won't balance because total debits have to equal total credits. So we go to the next line, and that next line also gives us an instruction. It tells us to go to Chris Clark Capital and post $25,000 in the credit column. So we go to Chris Clark Capital, $25,000 in the credit column comes from transaction A. Now we've completely posted transaction A, so we just want to tick it off and make sure that we note that we've already done it. We don't want to post it twice, or we don't want to forget it, otherwise you will never balance. So you have to be very, very careful. If you forget to put in one side of the transaction, or one side says 2,500 and one side says 25,000, or one side says 25,000 and one side says 52,000, you will never balance. So be very, very careful and very, very slow when you're doing the posting. Okay, hopefully that you understand. If not, rewind this tape and listen to it again. Let's go on to transaction B. Transaction B, we have a debit to land and a credit to cash. So we're just going to start off on the first line first. We want to just go down the row, make sure we don't skip anything. Again, if we skip something, we will not balance. So the first line in transaction B is telling us go to the land account. The amount is $20,000 and it goes on the debit side in the debit column. So we go to our land account, $20,000 in the debit column, and we note that that comes from transaction B. Then the second line over here is telling us go to the cash T. The amount is $20,000, but notice this time it's on the right side of the entry. It's on the credit side of the entry, so it's going to go in the credit column. So in our cash T, $20,000, credit column, that also comes from transaction B. So now we've posted both sides of transaction B. I can tick off that that one is now done. Okay, hopefully you understand. I'm sorry that this is a recording. You can't stop me if you have any questions, but you can back up the recording and kind of look at it again if something doesn't make sense. Now let's move on to transaction C. We've already posted A and B. The first line in transaction C is giving us an instruction. Go to the supplies T. Amount is $1,350, and it goes in the debit column of the supplies T. So we go to our supplies. The amount is $1,350. It goes in the debit column, and that one comes from transaction C. Now we've only posted half of that transaction, so we have to go to our accounts payable account. That's in the liabilities. Second line of transaction C is instructing us, go to the accounts payable T. The amount is $1,350, but this time it's in the credit column. So go to the accounts payable T, enter $1,350 in the credit column, and note that that comes from transaction C. Now we've posted both sides of transaction C, so I'm just going to tick off, let myself know that it's done. You can use a highlighter at home or just check them off with your pen, whatever you need, but it's very important to make sure that you tick them off when you're done. You don't want your mom to call you in the middle of this. You come back and you say, what was I up to again? B or F? And you'd have to basically start all over again. So just a little bit of organization can help you in the future. Accountants are all about organization. Let's move on to transaction D. Now we have transaction D. We're going to look at the first line first. The first line, once again, is giving us an instruction. Go to the cash T. The amount is $7,500, and we want you to post it in the debit column. So in the cash T, it's in the left side of the entry, goes into the left column, $7,500. That comes from transaction D. Now we've only posted half of that transaction. If we don't post the other half, we will never balance. So I have to go to the second part of the transaction. We go to fees earned, which is a revenue account, so I have to look in the revenue category. The amount is $7,500, but this time it's on the credit side. So we post $7,500 credit to the fees earned account. And once again, we're going to note that that comes from transaction D. Sorry, I should have done this before. Just trying to help myself out in the future here. Okay, now we're going to move on. We have now posted both sides of transaction D, and we are going to note that transaction D has now been completed. Now we're going to move on to transaction E. Transaction E is a compound entry, and that's okay as long as the total debits equal the total credits. Even if there's 20 accounts in the entry, all with different accounts, as long as the total debits equal the total credits, that is what is important. So we're going to go to our first line. wages expense, $2,125 on the debit side. So we go to the wages expense T, $2,125 on the debit side that comes from transaction E. Next we go to rent expense. Second line is instructing us go to the rent expense T. The amount is $800 in the debit side. So we go to our rent expense T, $800, debit side, transaction E. Next we go to the next line. Make sure you don't skip a line. Again, if you skip a line, you will not balance. Our next line is utilities expense, $450 on the debit side. So we'd be very careful to enter it in the correct account. We go to utilities expense in the expenses, $450 on the debit side that comes from transaction E. Next line is miscellaneous expense, $275 on the debit side. That is what that line is instructing us to do. So we go to our miscellaneous expense T, we enter $275 on the debit side, and note that that comes from transaction E. Now the only one we have left is cash. Cash is on the credit side, $3,650 is the amount, so we go to our cash T, enter $3,650 on the right hand side, and note that that comes from transaction E. We're now all done with posting E, so I'm going to tick that one off and note that that one is done. Now we're going to move on to F. The first line in F instructs us to go to the accounts payable T. The amount is $950 and it's on the debit side. So we go to accounts payable, amount is $950 on the debit side, and we note that that comes from transaction F. Next line in transaction F is cash, $950 on the credit side. So we follow those instructions. We go to the cash T, $950 on the credit side. Note that that comes from transaction F. We have now completed transaction F, both sides, so I'm going to tick that off. Now we have transaction G. The first line tells us to go to the supplies expense account. Supplies and expense and supplies look like the same account, but they're really not. Supplies expense are the supplies that have been used by the business. Supplies are the supplies that we currently have on hand. So together they equal the total amount of supplies that were purchased by the business. So they're similar, but not exactly the same. So the first thing we do, first line, go to supplies expense. We're told to enter $800 on the debit side, so that's what we do. Enter $800 on the debit side of supplies expense, transaction G. Now we move over to the second line of transaction G, supplies $800 on the credit side. So we go to the supplies account, we enter $800 on the credit side, and that one is transaction G. And now we have all done with transaction G. Now we have only one more transaction to post before we can get the ending balances in each account and then create our trial balance. So the last transaction that we have, transaction H, owner withdrew $2,000. So the first line tells us to go to the Chris Clark drawing account, enter $2,000 on the debit side. So $2,000 on the debit side in Chris Clark drawing for transaction H. The next line in transaction H tells us to go to the cash T. The amount is $2,000, but this time it's on the credit side. So we go to our cash T, $2,000 on the credit side, transaction H, and now we note that we have posted transaction H. So at this point, we are now completely posted. We have now posted all of the H transactions of Net Solutions. So you can kind of see it taking place in the accounts. Now, the next part is to just calculate the ending balance in each one of the accounts. So first of all, if an account just has a single balance, so for example, all of our equity, revenues, and expenses just have, a single entry, not a single balance, that is the ending balance in the account. So for example, the ending balance of Chris Clark Capital is $25,000 on the credit side. Once again, very important that ending balance is on the credit side. The ending balance of Chris Clark Drawing, $2,000 on the debit side. Ending balance of fees earned, $7,500 on the credit side. Ending balance in wages expense, $2,125 on the debit side. Ending balance in rent expense, $800 on the debit side. Remember, which side the ending balance is on is just as important as the balance itself, because the whole point is to balance our trial balance at the end. Now, supplies expense, $800 on the debit side. Utilities expense, $450 on the debit side. And miscellaneous expense, $275 on the debit side. Now let's go to the accounts that are a little bit more complicated. Cash is the most complicated because it has the most amount of entries. We know that everything on the left-hand side of the cash account represents an increase, and everything on the right-hand side represents a decrease. So what we're going to do is we're going to add $25,000 plus $7,500. That's all the times the business received cash. Then we're going to subtract the $20,000, the $3,650. So note that even though they're subtracted, they do not have a negative number in the T. We just know to add and subtract depending on what side it's on. So we add the two cash receipts, the $25,000 and the $7,500, and subtract all of the cash payments, $20,000, $3,650, $950, and $2,000, and we wind up with an ending balance of $5,900 on the debit side. So again, because assets normally have a debit balance, this means that after all of the transactions, the business has $5,900 in cash. In terms of supplies, supplies is also an asset, so the $1,350 is an increase and the $800 is a decrease. So we see that we wind up with $550 in supplies, which is just what Transaction G told us. Transaction G told us that $550 worth of supplies remain. Land, the balance is just the $20,000 on the debit side. And notice accounts payable, because accounts payable is a liability, the $1,350 represents an increase and the $950 represents a decrease. So we just know, we don't put in the positives and negatives, we just know whether to add or subtract them depending on what type of account and what side of the T it's on. So because accounts payable is a liability, credits represent an increase, so we're going to add the $1,350 and subtract the $950. And if you yourself charged up $1,350 on your credit card and paid off $950, you would owe $400, and that's what the business owes, $400. So now we've got the ending balance in each one of the accounts that has been mentioned in the general journal. So I hope I didn't go too fast. I hope you're understanding. Now we only have one final step in the process, is to prepare our trial balance. What our trial balance is a listing of all of the accounts in our general ledger. Right over here, all of these T's represent our general ledger. All of the accounts in the general ledger that have a non-zero balance, and we just put in their ending balances. So we don't care about all the cash payments and cash receipts. We only care that we end up with $5,900 of cash. And notice on our trial balance, there's a debit and a credit we have to balance out at the end, so you have to make sure to put them in the correct column. So let's just copy over the balances. Cash over here has $5,900 on the debit side, So we put 5,900 debit column in the cash. These should not be bolded. I don't know why they are. The next one we have is supplies. Supplies is 550 on the debit side. Again, we're only looking at the ending balances. Land is 20,000 on the debit side. Now we move to accounts payable, but accounts payable is 400 on the credit side, so that has to go in the credit column. The next account we see is Chris Clark Capital, 25,000 on the credit side, so that balance goes in the credit column. Chris Clark Drawing, though, is 2,000 on the debit side, so that one goes in the debit column. Next we have fees earned, 7,500 on the credit side. And now we just list all of our expenses. Wages expense is 2,125 on the debit side. Rent expense is 800 on the debit side. Supplies expense is 800 on the debit side. Utilities 450 on the debit side. And miscellaneous expense 275 on the debit side. So now the last thing we do is add up all of our debits and all of our credits, and if we balance, we're extremely happy because we're basically done with the whole process. So I'm going to add up all of my debits. That's why it's called a trial balance, because we try to balance. So I'm going to add up all of the debit numbers. If I add up a blank cell, it just adds 0. So notice all of my debits add to 32,900. And now I'm going to copy the formula here. This formula adds up all of my credits, 425,000 plus 7,500. So I add to 32,900 of debits, 32,900 of credits. So what I'm going to do is I'm going to double underline the bottom to show that I'm in balance. And now I'm basically really happy because I can now do all of my financial statements. My income statement is right here. Then I have enough information to do my statement of changes to equity with the investments, the withdrawals, and the income. And then I have enough information to do my balance sheet. But I think this recording is enough for now. So I'm going to end right here with the posting. Again, if you have any questions on this, feel free to email me. Good luck with the homework.